Hello everybody, welcome to another weekly video. Today is Monday, 4th of January, and let's begin the new year, 2021, with a fairly positive note than we have gone through 2020. So let's look at the markets, what they have been doing through the holidays, and how basically the holidays affect the markets. As you can see, looking at the chart of S&P 500 and other stock indices in US, it was again quite positive during those holidays and during the time which was expected to be much lower volatility, and overall the markets were expected to be more calm. Nothing really interesting happened. As you can see on stock indices, S&P 500, Nasdaq, and Dow Jones, we were able to push even higher, and we are beginning the new week with another on futures with another rise to the new record highs. Right now we are testing pretty close to a level 3,800. Which will be the key level for this week, most anticipated. If we are going to look at the lower levels, obviously we still have the level here, 35.42, which can be in conflation with the 100-day moving average, which will be very strong support. But as right now, as we are looking at the markets, Wall Street analysts and investment banks said that there's something about 20 to 30% overvaluation of stocks in the United States, which can bring any day and any time some correction, which will be mainly technical, because fundamentally stocks are still being pretty much supported by massive monetary and fiscal stimulus. Also, there might be some sort of uncertainty that will be coming from U.S. election, as I believe is on 20th of January, when new president should be formally elected. So there is some uncertainty because obviously Donald Trump keeps on fighting and probably will not give up until the final day of a new inauguration. So we'll see how this will play out. But stock markets in the last week, obviously supported by decrease in risk in the markets, which was supported by improvement of AstraZeneca vaccine in UK, in India. The distribution has begun. Vaccinating started this week. Also, Moderna vaccine and Pfizer vaccine is being distributed and is being used across the world. So there is many things that can be used as a support for investors, and they can look forward ahead to some brighter tomorrow. So this basically everything that sums up the stock markets in the last week, and fairly enough in the coming weeks. If you can look at the DAX was also able to push above the record highs that were created at the beginning of this year. Beginning of the year 2020. So nothing really surprising here, as well as Brexit got solved, and we have a deal. Between UK and EU, which right now should put main focus on coronavirus. So as the cases might keep surging across the Europe and Czech Republic, in UK and Germany, the more lockdowns are probably going to take place, or longer lockdowns are going to take place in those European countries, which might affect the economy. We'll see how the markets will react to that. But right now they are mainly operating with some expectation, and the expectations are fairly positive. The vaccine is being distributed, and the people are getting vaccinated. So there are certain expectations that everything should go just right. So we'll see how the valuation will respond and how the stock markets will respond. Right now, everything should be good, but once the results for the fourth quarter will come, as well as macroeconomic news, as well as earnings for fourth quarter, they might get disappointing, which can drag down the valuation of stocks in Europe as well as in United States. So that's basically everything that was happening at the stock markets. If you look at the Forex, Euro keep surging. Obviously, stock markets are coming up. Other riskier assets are going up, which puts pressure on US dollar, and US dollar creates space for currencies like Euro, British Pound, Australian dollar, Canadian dollar, Japanese yen, and they all are surging. So this is the main story, and everything is probably the same. Everywhere is the same story. So weakening US dollar creates the space for Euro. Euro, as a result of that, is keep surging right now again. Today testing 123. GBP USD, as you can see, broke the level here, which was multi-month high, and right now keep surging. So the expectations are here quite big that the economy and overall the British pound will not be affected as badly from the Brexit turmoil. So Brexit, British pound is positive, Canadian dollar is positive, Japanese yen stays positive. Interesting thing about gold also is positive, and this is mainly the result of weakening US dollar. There also were some disappointing data from China as last week, but as we're looking at this candle, this daily candle, which is mainly result of weak US dollar. So weak US dollar has again put some support for US for gold and other currencies, and so this is probably surprising a little bit, because the risk aversion in markets is decreasing, and gold should be probably moving in the direction to lower prices. So this, to me, is quite interesting and quite surprising that this is happening. But it's probably the result of weak US dollar as it is. So gold is surging. Also, who is surging is oil. As we are looking at the oil right now, we can look to lower time frames, maybe to 4 hour. Today was fairly positive, as we were surging very close to $50 a barrel. But right now we are decreasing a little bit and going down. So it was probably something with the orders from last week, and also the reaction to starting of the vaccination in the UK, which obviously gives us some positive outlook for demand in UK and some European countries. But like I said, some European countries are battling with coronavirus crisis, as the cases are they keep on rising. So oil probably should find its fair price around $48 a barrel, somewhere around here, which will be as well as the consolidation here. So they can bounce back here up, but fundamentally it does not make much great sense. So we will just have to wait and see how this will play out. As we're beginning the new year and the new week, we have some very important macroeconomic data. Not really the macroeconomic data, but more the Federal Reserve FOMC meeting on Wednesday. That's probably the most interesting fundamental this week. We have some PMIs from European countries, from US on Wednesday. Like I said, there is the or is that Thursday? That's probably Thursday. But we have things that we usually have any other week. So, like I said, PMIs, stocks change in of oil in U.S. ADP unemployment. We have on Friday interesting data from U.S. Job sector, as we are expecting non-farm payrolls, unemployment, and other job data from U.S. as well as from Canada. And on Thursday, we have IB non-manufacturing PMI. So a lot of PMIs that might be interesting if there is some change, big change, and big difference against the consensus that this can pretty much affect the markets. As probably they will mainly be focused on these things as the Brexit got resolved, and other things are probably right now decreasing and should not affect the market as much as other stuff. So this will be for today's video. Thank you guys for watching. If you have any comments, leave it down the question, leave it down the comment section, and I will see you next.